All right, so I want to welcome us to today's evening session. Like I said last week, we had to shift this to the evening time so that we can accommodate more people because you understand that the earlier time we were having this online session used to be 3 p.m. and it wasn't convenient for some people. Some will be at work at that time. Okay, so this is why I have to mute everyone. This is noise. All right, sorry, I have to mute. I was thinking I could leave us to have a conversation before, but let's just mute. Towards the end, I will unmute and you can ask questions. So what we're doing in this class tonight, two things. We'll look at the basic terminologies used in forex trading. Then we'll now go to the MT4. Last week we had the desktop version. We had the training on how to use the desktop version of the MetaTrader 4 platform, and many requested that we should have the mobile version also because many of us are actually mobile users. So we're doing that this evening. But like I said, first we'll look at the basic terminologies of the forex trading, and then we'll go into that. So I want to welcome everybody once again. So let's start. So in trading, the first thing you need to note in trading, I mean, you are trading basically because you want to make money. And to make money, you need to place trades. So when you want to place trades, there are three terminologies you need to be aware of, and that is the entry price, the stop loss, and the take profit. Very essential. Entry price, stop loss, take profit. What is entry price? Entry price is the price at which you execute a trade, whether you are buying or selling. Now, in this business, either you're trading currencies, stocks, commodities, indices, cryptocurrency, anyone, what we are dealing with is actually the price of that financial asset in the global financial market. If we're trading stocks, for instance, it doesn't mean that we are part owner of the company whose stock we're trading. So let's say we're trading the stock of Facebook or Amazon. Now you are not a owner of the stock because you didn't buy directly from the company. You understand? It's not as if the company brought out an IPO, but what we're trading is a fluctuation in the price. That's what we're trading. We're trading the current market price. Same thing if you're trading gold. It's not as if you have a bar of gold or crude oil. It's not as if you have barrels of crude oil in your house or somewhere. No. What we're trading basically on this platform is the price of this financial asset. And as such, there's an entry price into every trade. So the entry price is the price at which you are executing a trade. After proper analysis, though, you've analyzed the market and you are convinced by analysis that the market, maybe if it's going up, then you're taking the buy trade. If it's coming down, you're taking the sell trade. So the entry price is your entry point into the market or into a trade. Then the next terminology to take note of is the stop loss. Stop loss it's called stop loss order. Now, stop loss is you telling your broker how much you are willing to risk with your trade. Now, we need to understand that with forex trading or with trading generally online, there is a risk involved. I mean, that is a fact everyone should know. And it's not uncommon with this business alone. Every other business in the world has a measure of risk or the other. The only difference is that the level of risk varies. Some businesses are high risk while some are low risk. So there's no business, any business that you find in this world that there's no risk. To be honest, there will not be profit. That's the truth. Because there is this saying that the higher the risk, the higher the profit. So when you're doing a business with a high risk, well, it means the profit will be higher. When you're doing a business with low risk, it means the profit also will be lower. But when you're doing a business with no risk, then I tell you there'll be no reward. You take a risk in order to make a reward or a profit. That's the way business works generally. So in trading also there is a risk. But the beautiful thing about trading is that you can actually limit the risk. In some other businesses, you may not be in control of the measure of risk involved, but here you are actually in charge. You can determine the level of risk involved, and that's what you can do with a stop loss order. So with the stop loss order, what you're doing is that you are seeing ahead, okay, that what if I place this trade and the market does not go my way? Is there a way I can limit my risk so that a large percentage of my capital is still protected? That is what stop loss order is telling us. And professionally, you're not expected to risk more than 1 or 2% of your equity, otherwise called the capital. You're not expected to risk more than 1 or 2% of a capital per trade. So that means if you're Trading with an account of like $1,000, you're not expected to risk more than $10 or $20 of that capital per trade. And you can do that, you can limit that by applying the stop loss. So maybe you enter a trade now, and for one reason or the other, the market does not go, does not go your way. Then once the trade gets to minus $10 for 1% or minus $20 for 2%, the platform automatically closes that trade as a loss. But the essence of that loss is to protect your remaining capital. Because if you don't apply that stop loss, what if the market goes minus 50, minus 100, minus 200? And that's why some people tell you that, oh, they don't like to use stop loss. If you don't use stop loss, it's like you are penny wise, pound foolish. That's what it is. If permit me to use that, because what if the market goes against you so high, then you'll be having a large portion of account, exposed to risk. So please always use stop loss. Take note of that, please. Always use a stop loss order. It's essential. It's the essence is to protect your capital on the long term. I believe that is well explained. Now, the next terminology you should note is the take profit. So when you enter into the market, when you execute a trade, is the take profit that tells you that you've gotten to a profit taking level, you know, so let's assume you execute a trade to buy, and you've determined that when the market gets to like 50 pips, that is when you want to take your profit. Then the moment the price gets to that level, because you've already initiated it on the platform that you are taking your profit at 50 pips, the platform automatically closes that trade in your favor. If it is a stop loss, once you've applied it, the platform automatically closes the trade against you, but in the essence of protecting your capital. So if you lost $20, you still have $989 of your account well protected in the case of stop loss. If it is take profit, the trade is closed in your favor. So you have $1,000, it closes at $50 profit. Then your total capital now becomes 1,000 plus $50, which is 1,050. You understand? So that's how the terminologies work. Entry price, the price at which you enter into a trade. Stop loss is to protect your capital, while take profit is to close the trade when the platform goes against you. Goes in your favor, pardon me. Now, what about how some people that are not tell you that, oh, I don't even use take profits, it's not necessary. Well, if you don't use take profit, this is the implication. Some people will say they don't use take profit because they believe, what if the market just suddenly goes to 1,000 pips in my favor? I will have shortchanged myself by closing at 50 pips. Number one thing is that it's not guaranteed that the market will make such massive move. That's just an expression. Anyway, it may not go to 1,000, maybe it's 500 or 200 or 100. It may not go as high as that. You can't determine that. It could happen in rare cases, and you don't know whether the day you're trading is that day. So it's not an occurrence that happens all the time that the market will experience such volatility. The other side is that if you don't use take profit, the market will go in your favor like that 50 pips I mentioned earlier, and price will retrace or reverse afterwards. So that if you're not careful, your winning trade may become a losing trade. So if it goes to 50, goes to 70, 100, you refuse to close it, I tell you, price can as well reverse from that 100 to minus 50 and minus 100. So you can also end up having a losing trade despite the fact that your trade was a winning trade earlier. So that's why it's always advisable to make sure you have your stop loss and take profit in order all the time. But the truth is that the moment you have your take profit and stop loss in order, honestly, you don't need to babysit your trade anymore. You don't need to start watching your trade per second, because you've already determined the level of risk on that trade. The worst that will happen is that you will lose. If it's $1,000, you lose $10 and $20. If it goes against you, and if it's a profit, you win $50. So why do you need to get agitated over the trade again? There is no need running emotions. Once you have put your take profits and stop loss in place, you can leave your trade and go and do other things. And one of the two is what will happen. But part of what we do here at Pure Prime is that we guide you properly so that you end up having more winning trades than losing trades. If you've been with us for a while, you will attest, to what I'm saying. If you see what has happened on the platform today, in the signal groups, I tell you, people are making profit. Even over the weekend, a signal that was dropped on Friday. Somebody was chatting me this morning how he woke up this morning and found the gold signal I gave last Friday. He already made 37,000 naira this morning just while sleeping in the night and wake up in the morning and finding it. So we have a higher winning rate with our analysis and signals. So All you need to do is to make sure that when we give this information, this data, just put in the right things there, and you see that the result will come out in your favor. So by the time we get to the MetaTrader, I'll show you how to use this entry, take profit, and stop loss, how to set it on the platform. All right, let's make some progress. So the next thing we want to look at is now the terminology. For the other terminologies, we look at the base currency and quote currency. Now, when you have a currency pair quotation, a currency pair quotation are two financial instruments where you are buying one and selling the other. So, if for example you want to exchange naira for dollar, now because you have a naira, you're expecting a dollar from the person you're exchanging from, the bureau de change person, then we can call it a currency pair. That is two currencies paired against each other. So if you have a currency pair quotation, the currency on the left hand side is always called the base currency, while the one on the right hand side is always called the quote or the counter currency. Again, the currency on the left side is called the base currency. The one on the right hand side is called the quote or the counter currency. Now, in this example, we have Euro USD. It could have been a pound here, and maybe a Japanese yen, and it will still have been that the pound is the base currency while the Japanese yen is a quote currency. So any currency on the left is base, and any currency on the right is a quote or counter currency. Then we have the bid price and the ask price. Now here we say that the bid price is the trader's selling price and the ask price is the trader's buying price. If you want to exchange currency, maybe you want to travel abroad and you want to exchange naira for dollar, and you meet the bureau de change person that will exchange for you. The first thing you ask that person is what is exchange rate, and it tells you, maybe it tells you that his exchange rate is 1,700 naira, for example, and you tell him that is too high, you start negotiating for 1,500, but eventually he agrees to sell to you at 1,006, which favors him and favors you. Now, that initial price you asked him when you were asking is what we call the ask price, because that is the price you are asking to buy. And the negotiated price that he agreed to sell to you eventually is called the bid price. Now, for those that are just joining us, like I said earlier, that we're running through these terminologies, then we'll look at MetaTrader for mobile. So I want you to just hang on with us as we run through these two sessions together. So, like I said, the ask price is the price you are requesting to know how much is willing to sell to you, and the bid price is the negotiated price that he finally agreed to sell to you. So, if you come to this side of the table, you will see that the ask price is just the same as the side that we have the quote currency. So the quote currency is the one that contains the ask price, while the base currency is the side that contains the bid price. And usually the ask price is always higher than the bid price. Ask price is always higher than the bid price. Now that takes us to the next one, which is the spread. Now the difference between the bid price and the ask price is always called the spread. The difference between the bid price and the ask price. So if you flip back to this table, you can see here that the ask price rather ends with number 7, and the bid price ends with number 4. So what we're saying is that the difference, that is 7 minus 4, which is 3. That means that the 3 is the spread on this currency, Euro USD, in this example. Now, every financial asset, financial instrument has its own spread. It varies. It's not exactly the same for all currency pairs or all instruments, but every financial instrument has its own spread. So the difference between the ask price and the bid price is called the spread. And the next we want to look at is the PIP. And PIP stands for price interest point. Price interest point. Now, PIP is just our way of expressing how price moves from one point to another in trading. In a layman's term, we use the word point, but in trading, we use PIP. That's how so if price goes from a point A to a point B, by 10 points, we say it has gone up by 10 pips. That's how we calculate it. So we don't use the word point. Point is represented by pip in trading. Now, the next terminology we need to know is what is called the lot size. Now, this is very important. I want you to pay a lot of attention. This can make you as a trader, it can also break you. So please take note of it so that you can learn how to apply it appropriately. So we say that trading is done in specific units called lots, and lot size is what measures the percentage of your capital that you use per trade. Now, people always ask the question that, oh, if I fund $10,000, is it that 5,000 will be taken out and another 5,000 traded? People don't understand how it works. No, nobody pulls out any amount of the capital you have in your trading account. That particular account you're trading, that's your capital, except you decide to split the money into two accounts. But the one you have in the account that you are trading, that's the money that is there. But what determines the percentage of that account that is traded per time is the lot size. So your 10,000 is sitting in your account, but the lot size is now what determines, the amount or the quantity of that 10,000 that is being traded. Now, so we say it also determines your profit or your loss on that trade. So when the lot size is high, the implication is that your profit will be very high if things go well. But on the other hand, if your lot size is high also, and you end up with a loss, it also means your loss will be very, very huge and monumental. So lot size is to be used with a lot of caution. So there are three types of lot sizes. We have the standard lot size, the mini lot size, and the micro lot size. Now, the standard lot size, for the standard lot size, one pip is valued at $10. For the mini lot size, one pip is valued at $1. And for the micro lot size, one pip is valued at 10 cents. Now, the essence of this, like I said, is to determine the percentage of the capital that is exposed to the market per time. But the problem with most traders is that they always want to use a high lot size because it can help them make a lot of money. Now, while this is true, you need to also be wary of the implication. You should always ask yourself the question. Don't always think the market will go your way all the time. The question a sincere trader will ask many times is, what if things did not go as planned? Sometimes you may go on YouTube and you see people say they are flipping accounts and they have account of $2,000. They are using maybe three standard lot to trade it, and before you know what is happening, they are making a lot of money. You are so excited and you want to do the same thing. I discovered that it's not working that way. You blow your account, So there are specific lot sizes to be used for your account to make your account safe, and they are industry standard. Number one, a standard lot size is only to be used on a $10,000 account. So if that your mentor online is telling you to use one standard lot on two, 3,000, it's not telling you the truth. He may be using it and it's working, but don't forget he must have tried it many years before he got it. You are still new. If you want to try the same thing he's trying, you may not get it and you may get your fingers burnt. So $10,000 works for uh, a standard lot. If you are to use a mini lot, which is a zero point 0.1 lot, works on $1,000 account. And for a micro lot size, the minimum should be like between 200 to $50. If you have $200 to $50, don't go beyond the micro lot, which is 0.01, and that way your account will be safe. See, our goal at PU Prime is to make you profitable on the long term, and as such, we teach you, we guide you, and we encourage you to apply industry standard, globally acceptable risk management standard, so that your account can be safe. And I tell you, your account is safe on our platform as long as you apply the right rules and the right principles. So that's it. In a buy trade, we expect the price to go higher, and in a bearish trade, in a sell trade, we expect the price to drop, lower. So when you enter a trade, the take profit, this is an example of a trade. You can see the entry price here. The take profit is above in a buy trade. The take profit is above the entry price, while the stop loss is below the entry price. You can see entry price, take profit above, and stop loss below. And you can see that the distance between the entry and the take profit is wider than the distance between the entry and the stop loss. What does that tell us? In trading, your take profit must always be bigger than your stop loss. Otherwise, you will not be profitable on the long term. If you end up having your stop loss bigger than your take profit, eventually, if you add multiple trades together where you add winning and losing trades, you discover that overall you will end up with a loss. So your take profits should always be higher than your stop loss. Leverage. Leverage is another very important terminology we need to know. You said that leverage is the ability to use something small to control something big. Now, when trading started initially many decades ago, especially forex trading, it was purely a transaction between banks, big banks, uh, not just big banks, even between banks of different countries, because it was called foreign exchange. You are exchanging the currency of one country to that of another, and that is a simple definition of forex trading. Forex trading simply is an exchange of currency. And like I always tell people, forex trading is not just until you carry a laptop or phone. Anytime you exchange a local currency for a foreign currency, you've done forex trading. So back in those days, it was the capital they were using to trade was quite large. 300, 500,000, $1 million. That's in that range. So at that time, trading was not accessible to regular or retail traders like you and myself. But at the advent of the internet in the year 1999, 2000, brokers began to spring up, and brokers now brought in this tool called leverage. So what leverage does is that leverage now boosts our account in such a way that it now resembles the amount that was being traded back in the days. So in such a way that now you can trade with $10,000, $20,000, 5,000, 1,000, 300. That was not possible, many years ago. It wasn't possible many years ago. But what made it possible now is the word leverage. So leverage uses, makes it's a function of the platform that gives you the ability to trade, to use a small account to control a bigger account. So how does that really work? I'm going to show us that right now. So this is how it works. Now, if you look on the screen, you'll see that leverage comes in different categories. You can see 1-to-1, 2-to-1, 100 to 1, 400 to 1. These are ratios. So it can either be 400 to 1 or 1 to 400, 1 to 500. It's still the same thing. It's still a ratio. So this is what happens. Let's assume you're using the 1 to 500 ratio, and I really do recommend you use the 1 to 500 ratio. It's very, very, it's good to use it. Let me just put it that way. So assuming you're using the 1 to 500 ratio, what it means is this. The 1 is your capital, and the 500 is what the platform multiplies your capital with. So let's say you fund your account, your capital is $1,000. Then what it means is that the platform will now multiply your $1,000 by 500. So even though you fund $1,000, the platform is seeing your $1,000 as if it is $500,000. Now, please take notes. I did not say you will see a balance of $500,000 in your account. I'm only explaining how this works. That as far as the system is concerned, is seeing your $1,000 as a 500,000 because you applied a leverage of 1 to 500, but your balance still remains 1,000. It's just the internal working of the platform to make it easier for you to trade. So what is the benefit of this leverage? The benefit is that if you're using a small leverage like 100 to 1 or 50 to 1, you may not be able to place more than one trade at a time. So even if you see multiple opportunities, so let's say you belong to our signal group for our funded clients where we drop signals often, 3 signals, 5 signals in a day sometimes. That means if once you take one, you can't take another one until the one you have taken has closed. You cannot take another one. Why? Because your leverage is small. But if you're using a leverage like 1 to 500, then you can take multiple trades. So that's the difference. So the higher the leverage, the more trades you can take. Though some higher leverages may not really be so healthy, but 500 is still okay. 1 to 500 is okay. With 1 to 500, you can take multiple trades. But then there's also a word of caution. Leverage can be like a double-edged sword, like they say. If you abuse it, it may still have a negative impact on you. So the fact that you can take multiple trades does not mean you should now over trade, because that is the negative side of leverage. People end up over trading with it. Over trading means opening many random trades, unnecessarily. At times, you see some people's trading account, you find like 20 trades open at a time. That is over trading. Even though the leverage allows it, it's only to be used because they believe the person using it already knows how to trade. But if you're a newbie, please limit your trades. What I encourage my students to do is to have a psychological limit on the number of trades they place. Don't have more than 3 trades open at a time. If you follow that rule, you discover that you blow account less often, or you even end up not blowing an account anymore. If you can obey the lot size, use the recommended lot size for your account, and also don't abuse leverage. You discover that you will not be able to blow account anymore. Your account will be safe. I'm telling you. So just follow that. And if you're there, you're listening to me, maybe you've been having issues, always blowing account. That's just a word for you that will bail you out of blowing account going forward. So use leverage and don't abuse the usage of leverage. Then the last terminology we're looking at is the bull and the bear. Now, the bull means the market is going up, is going in the buy direction. So we say it's a bullish trend. And bear means the market is dropping, value is depreciating. So we say that is a bearish trend. All right, so that's going to be all from the terminologies. If you have a question, please just hold it. Let's run through uh, the second batch of this session training tonight. Then you can ask all your questions. And the second session we're doing now is on the MetaTrader platform. The MetaTrader platform, and we're looking at the MetaTrader 4 on mobile, the mobile version of a MetaTrader 4. And we're actually using slide tonight. I really wanted us to do a video, but we're having some technical issues. We couldn't run that through, but let's still look at the slide. At least this is what we have on our phones, so it's still going to work. All right, so if you're there, you can also follow through as I just go through this, or you can watch the video to this training session later on. Now, the first thing is this: any function you want to carry out on your MetaTrader mobile, just tap the middle and this blue dashboard will appear. That's your central control button for a lot of things you want to do on this MetaTrader on your mobile, either MT4 or MT5, but we're using MT4 for this training tonight. Now, you look at this part here, you can see M1, let me change the color of this. You can see M1, M5, M15, M30. Those are time frames. So with this, you can select the time frame on which you want to trade. You can select the time frame. Now, you can see this place that contains a rectangle, a triangle, a circle. It's one of the control buttons. When you click it, that is where you can have access to your trend line tool, your vertical line tool, horizontal tool, Fibonacci tool, and a host of others. Now, this other one is called the crosshair. That you can see it's like a cross. Usually, this crosshair is just used to mark price. Maybe you're targeting a particular price, you want to identify it. You can use a crosshair to do that. And this F function is a special function key that takes you more deeper into the platform, especially to where we have the indicators. That's the function key. So we've seen the time frame, the box, circle, and triangle to the crosshair and the function. So now let's assume you want to add an indicator to your chart. How do you do that? So add an indicator to your chart. You click on this function key, this F key. That's what you click on. When you click on the function key, it takes you to the next slide where you will see this menu appear. Now you see the main chart. You may see the indicator window or not, but at least the main chart is always there. So to add a new indicator, you click on the F plus in front of the main chart. So let's say we want to add the moving average. We'll click on that F plus button. When you click on the F plus button, it takes you to the next menu, and here you have it. So you now need to attach the indicator of your choice. So if that indicator, for example, is a trend indicator, then you will find it under trend. If it's moving average, for example, moving average is a trend indicator, so you will find it under the trend menu. If it's parabolic SAR, is under trend, you find it there. And if the indicator you are adding is an oscillator, oscillators like MACD, relative strength index, stochastics, you come to the oscillator section. They are down on this menu. You find it if you scroll down. You find, and if it's all these other ones you are seeing, but at least the most commonly used oscillators are either the relative strength index, the stochastics, or the MACD. You will find them on the oscillator menu, and you click and you add them to your chart. That's just how simple it is to attach indicators to the chart. Now, the other functions you need to learn on this platform is actually how to take trades, and that is, I believe that's one thing that you cannot do without. You are here to make money. So if you want to place a trade, how do you place a trade on this platform? You come to number one, you need to ensure that the platform is set to the currency pair you want to trade. For example, this is the currency pair I want to trade here, which is the Euro USD. This dollar menu, if you click on it, it will show you a drop down of all the currencies available to be traded on your account. But at least if you're trading Euro USD, all you need to do is, first of all, if it's not set to Euro USD, click the dollar button. The dollar button will show it. It's a drop down menu that contains all the currency pairs. So you scroll to the portion where the currency pair you want to trade is. Then, when you're now on that currency pair, you now click on this button here. This this one that looks like a book with a cross. That is the one you click on for you to place a trade. So when you click on it, then you go to the next menu. Then this menu will appear. It will drop to this menu where you see market execution. Now, this market execution is the same thing as what we call instant market execution, meaning you want to enter into the market now. So let's say, for example, we drop a signal in our WhatsApp group, in our funded client group, signal group, and we say, uh, enter the market now. I'm trying to remember the actual word they use. Buy Euro USD at CMP. That is current market price. That is the market, the price in the market now. What you use for that kind of a trade is called market execution order. So once you click on that book with a cross in the middle, this menu will appear. You'll see market execution. Now, the next thing after the market execution is this row, and this is the place where you have the lot size. Now, you can see there is minus 0.1 here, minus 0.01. Now, you can set the main thing, the main lot size is actually this one in the middle. So you can use the minus and the plus by the side to set it, or you can just highlight by the side here, use your backspace to clear it off and type whatever you want to type there. But make sure this lot size is always set to the recommended lot size for your account balance. Don't forget I said it earlier tonight that if you're trading, if you want to trade one standard lot is only to be traded on a $10,000 account. If you're trading 0.1 lot, minimum is $1,000 account, and micro lot, which is 0.01 from any account, $200 and below 0.01. So you need to set this lot size to the recommended one for that account. Otherwise, you may be doing yourself, a lot of harm. Now, the next thing here is on this side of the menu is this section. Now, this is the take profit section. This section here is the take profit. You need to type your proposed take profit here. And if it's a signal that you're given, then the TP is the one on the right side. Don't always forget that the right side is the take profit, and the one on the left side is the stop loss. You can see that there's nowhere all these things are written. That's the way the manufacturers of this app, that's the way they did it. They didn't put, except for market execution, you're not going to see much details after that. So take profit on the right, stop loss on the left. And after you've set the take profit and the stop loss, you now come to the lower part here. So if it is a buy trade, you click buy by market. If it is a sell trade, you click sell by market. That's just how to use this to trade. I believe we got that. Market execution, lot size, take profit on the right, stop loss on the left. Then you click whether it's a buy trade or a sell trade, and you will have executed your trade if you follow the process like that. The next one is if you have a pending order. I explained this in the last class when we did MetaTrader 4 for desktop. From the word pending, pending means you are not entering now, but you are setting the trade ahead so that when price gets to that level, the platform will automatically trigger you into the trade. And that is what a pending order is. So to get to pending order, that same market execution. Now, if you look at this market execution, I just flip back. You see that there's a drop down menu by the side here. So you click on that spot, and it will now show you that drop down. You now see the drop down below the market execution. There are four orders again. We have the buy limit, the sell limit, the buy stop, the sell stop. So let's assume we want to do a buy limit. Then you click on the buy limit. So when you click on the buy limit, let's go to the next menu, the next slide rather. You can see now, this is the buy limit is what has been activated. Again, set your lot size. Now, because it is a limit order, if it is instant execution, you enter the market now. But since it's a pending order and a limit order, so there's a specific price you want the platform to trigger you into the trade, and that is the place now labeled as price. That's why when we drop our pending orders, like I did this morning, I gave a sell stop order. So we say this currency AUD card sell stop at price so and so and so at price. That is what I'm mentioning here now. That is the price at which we want the platform to trigger us into this place, into the trade. So you put the data, the figure for that price. That's what you input into that section. Then again, we have the take profits on the right and stop loss on the left. And that's it. Then you come to the lower part here. If you put everything correctly, you will see that this button, there's a button here that is currently not activated. But if you put in all the data correctly, you will see that it will show up as place. It's currently highlighted in ash color, but if you do all the necessary thing, it will come up as a black color, place. That means you place the trade. So you click on it and the pending order trade will automatically be placed. And anytime price gets to that level, you'll be triggered into the trade. And the next one is buy. Okay, it's still the same slide. I think. All right, so for a buy stop order, you just click on it again. You go to that menu, click on buy stop if that is what the trade you want to take. Buy stop, set your lot size. Please, this is very important. Always check your lot size for every trade. It's very important. Oh, sorry. So we have the buy stop order, the lot size, the entry price, whatever entry price, either the one you determine by yourself or the one you got in the signal that we give. You put the entry price there, the take profit, and the stop loss. And the place will have been activated, the place button, it will be activated as a black button. Click on it, and you will have placed a buy stop order. All right, that's all for the MetaTrader. Tonight we've looked at, you know, different aspects of the MetaTrader platform. I've showed you uh, how to navigate around this platform, how to place a trade, how to attach indicators to your chart, how to set, instant execution and pending order. Okay, so that's going to be all from our training tonight. I will unmute everyone now. So if you have a question, you can either type or you ask, and I'm available to attend to you. So the floor is open for questions. Any question?
Please, I have a question.
Go ahead.
Supposing I want to set my indicator, I want to add an indicator to my MT4.
Yes.
Let's say the strong moving average and the is it okay? The strong and the lesser strong moving average. How can I do that?
It's the same
Maybe
thing I
the
should.
okay. Can you show us? Okay, you're not.
We are
Probably
not
you're
on
teaching
mobile
us from
directly. I'm
desktop.
teaching from a
Okay.
slide. Is a
Okay.
MetaTrader text mobile on slide, but it's the same process.
Okay.
You just click
Okay.
the function button, this F button,
Okay.
click the F
Okay.
button, then go to the
Okay.
next slide. You see the main chart. Click
Okay.
this F plus sign.
Okay.
When you click the F plus sign, it will take you again to the next slide. Now, moving average is on that trend. So you come on that
Okay.
trend and you click on the moving average. Now,
Okay.
what you're asking is how to set the fast moving average and the slow moving average. So when you get on
Exactly.
the moving average indicator itself, you only
Okay.
need to do a little adjustment. So whatever figure it is for your fast moving average, maybe if it is 5 EMA, you put 5 where
Okay.
you have the period. If it is a slow
Okay.
moving average, maybe that one is 10, you put 10 in the period. But you are going to set the two indicators separately. You first do one, then you come back and do the
Oh,
second one. That's why how both of them will appear on the chart.
okay.
Yeah,
I tried it today, but the thing I wasn't getting it. Maybe I will private chat you tomorrow. I'll try it
no
again
problem.
tomorrow, and if I get trouble, private
You're
chat you.
you, you're free to do that. You can do that.
Okay. Okay. Thank you.
You're welcome. Okay, cool, Prince. Sir, please, when are we going to learn how to identify entries? Okay, these training sessions we're doing, this is just the beginners class. Let me put it that way. And I believe we are ending the beginners class today. So subsequent classes will gradually go into deeper things. So that question will be answered in subsequent class. Is you need to learn to lay a foundation first. You know, when you lay the right foundation, then you can build on it. If you just jump into entries, there are many things you need to learn before you even talk about entry. What are you entering into? You understand? Except you have some knowledge already, but there is a way, there's a proper way to learn these things. Like I teach my students, before you can take a buy or a sell trade, you need at least three confirmations telling you it's right to buy or sell. So until you find those confirmations, you don't even trigger a trade. So you need to first of all know those things before you start looking at, when are you taking your entry. So just keep riding with us when we come for these classes. You gain more knowledge and it gets clearer to you. All right, Josephat and Tunde, do you have questions? I can see you've unmuted your mics.
No questions. Sorry, it's a mistake.
Okay. Um, Ato Joy, can you chat with me privately with the request you're making? It's not something I can attend to here. Just private chat me. I'm the one that sent the link to this class. You can look at the WhatsApp and get across to me from there. That's my official PU Prime line. Cool Prince. Okay, I know all this. I'm just waiting to learn more about entries. Okay. Then you can still attend our physical training too. That can also help. You're welcome, blessing. Okay. Another question? Good evening.
Sorry to ask, the
Sorry,
pending
your
order,
voice is a bit low. Can you speak up, please?
I said can you hear me now?
Yes, it's better.
Okay, the pending order you explained about, is it to be
Yes.
used when we have done our analysis and then we know where the market, then we just put our take profit and stop loss, then we place
Okay.
trade.
Yes, pending order is to be used when we do analysis and we give you a signal, and it's not an instant entry signal. For example, now during news trading, for some of you that are here tonight that have joined our news trading session a few times, you know that we give pending orders for our news trading. News trading like NFP, CPI. And don't forget, next week, Friday, is going to be our NFP for the month of February. It's a live news trading session. We'll give you entry, take profit, stop loss, everything. So this is how to trade it with a pending order. So let's say we want to trade NFP. NFP is the biggest news in forex market every month globally. Is the biggest. So it comes up first Friday of every month. So the next one will come up next week Friday. Next week Friday will be the first Friday in the month of February. So on that day, we're going to have a live trading session by 2:15 p.m. and we'll quickly analyze the market in some few minutes. Then we'll give you a pending order. We'll give you a buy stop, a sell stop, take profit, stop loss. Now, please, what I've taught you tonight, master it very well. It will make you money that day. Otherwise, you just be like a stranger. While people are making money and sharing their testimonials, you may not have anything to share if you don't, take time to watch this video again. So I will encourage everyone to make sure they watch this video over and over, and not just watch it alone. Try to practice what we have taught, so that you can become better at doing it. I hope I answered the question.
Hello, sir. Sorry, sir. Still have one question to ask.
All right, you're welcome.
The our lot size in
Yes.
placing, is it possible to make use of lower lot size and still make higher profit?
Is it possible to do what?
Like, is it possible to place trade with lower lot size and still make profit?
Of course. Of course, it's possible. See, the way trading works, what people are always getting wrong is they want to make all the profit on one single trade. And that's where greed comes in. The thing is that in a month, you can take multiple trades. You cannot judge your performance in forex trading by the trading of one day. Sorry, Jibrin Mohammed, please, your annotation tool is causing distraction on my screen. Please be mindful. So, as I was saying, the you don't judge your performance by one trade. You will take multiple trades in a month. So let's assume you take 5 trades in a week, 1 trade per day, 5 trades in a week. That will be 20 trades minimum in a month if you're a day trader. So if you are trading with a small lot size and you are having a higher winning rate, let's say out of 20 trades, you won 15. You make a good profit. Even if you are trading with a lot size, you will still be in profit, at least for your account, for the account size you're trading. But because of greed or impatience, people want to trade a high lot size on a small account on one single trade. Now, I said it earlier, there is risk involved in trading. What if the trade goes against you and it blows your account? Then you're out of the market, you're out of business. Why not trade a small lot size so that even if the trade you take is a losing trade, it will be minimal on your account. You can still bounce back without having any issues. So I can guarantee you that you can make profit on a small lot size. And when I mean small lot size, I mean even a 0.01. You can make profit on a 0.01. How do you make profit on a 0.01? If you're taking trades of, you're making 50 pips each time, that's $5. If you trade 10 of it in a week, that's $50. Times 4 in a month, that's $200. So it's not the lot size at all. No matter how small the lot size is, what matters is the probability of the trade you are taking. The higher your winning rate, the more profitable you are. And the more trades you take with a small lot size, the better for you compared to taking one trade with a high lot size. But one trade with a high lot size is exciting. You just take one standard lot on maybe 1,000 or 2,000, you make 300. It gets you excited. But the day to backfire, and which will likely happen. It will like because all trades will not be winning trades. So somehow it will backfire along the line, and you may end up losing your account. So it's not a crime to trade with a small lot size. I hope I answered the question. Okay, I'm not getting a feedback. Tunde, what lot size will you recommend for $1,000 account? For $1,000 account, use 0.1. I'm typing it now so that everybody can also see. For $1,000 account, don't exceed. Let me even just use the word don't exceed 0.1 lot. Don't exceed 0.1 lot for 1,000. If it is $5,000 account, don't exceed 0.5. So you can see the range like that. If it is $2,000 account, don't exceed 0.2. If it is $200 account, don't exceed 0.01. You understand? Because that one is a smaller account. Don't exceed 0.01. Do you know that sometimes I even trade $1,000 account with 0.03 and still profitable? The profit, don't see, the profit is not going to be on one trade. I keep emphasizing that. As long as you have that at the back of your mind, discover that you'll be profitable on the long term because you are keeping your risk minimal. So that's how it works. Okay, let me run through if I have any other question. Okay, so somebody is asking, where does the physical training take place and the venue? All right, physical training takes place at two locations. So we have our Abuja office. Now, PU Prime, we have two offices in Nigeria. Now, PU Prime is a global brand with a global head office in Australia. We have offices in about 20 countries globally, which includes Nigeria. And in Nigeria, we have two offices, Abuja, which is the headquarters for Nigeria, and Lagos, our regional office. So if you are based in Abuja and its environ, then you can go for physical training at our Abuja office at Work and Connect building. I'm typing it in the comment section now. Abuja office Work and Connect building 50 a B2 Ukiwe Street, Jabi, Abuja. So you can have training day. Now, training days in Abuja office is Tuesdays and Thursdays by 11 a.m. I think, sorry, 10:30 a.m. 10:30 a.m. there, but that's when they start. And so if you live in Abuja, you live in Kefi, Maraba, all those neighborhoods, you can go to the Abuja office. And if you're based in Lagos and its environ, Lagos, Mowe, Apapa, Ikotun, all those axes, you can come over to the Lagos office. The Lagos office is at Lagos Business Lounge, 54B, Adeniyi Jones Avenue, Ikeja, Lagos. Now for Lagos, the training time from next week, Monday, training is going to take place on Monday, Wednesday, and Thursday. By 11 a.m. So from next week, we're starting. Now, the thing about next week is this: we're entering the new month, and our training schedule is changing. We're trying to make it more efficient. So our training curriculum is going to be collapsed into 2 weeks. So we're going to have two batches of training. The first 2 weeks of the month and the last 2 weeks of the month. So if you're based in Lagos and its environment, you want to have a compact training. You start next week Tuesday, and next week Monday. Pardon me, Monday, Wednesday, Thursday, then the next week, as in the week after that, again, Monday, Wednesday, Thursday, and we'll be through with the curriculum, those 2 weeks. Then the third week, we'll start a second batch of training again, which will complete by the end of the month. The same thing is applicable in Abuja, only that Abuja training days is just Tuesdays and Thursdays. For Lagos, we have an additional day, Monday, Wednesday, and Thursday. For Lagos, Abuja is Tuesdays and Thursdays. So that's the physical address for the person asking. Nino, can you briefly explain what lot size means in a layman's language? Okay, I think I've explained that many times. Lot size is what determines the percentage of your trading capital that is exposed to the market. It can determine the level of profit you make, and it can determine the level of loss you will make. So if you trade with a high lot size, the tendency is that you make a big profit. But if the market goes against you, it also means your loss will be big. So instead of having the extremes, big profit, big loss, what if that loss is the type that wipe out your account? Then you start from ground zero again. Why not trade with risk management and use a recommended lot size for your account so that your account can be safe? And I said, if you want to trade one standard lot, there's no crime in trading one standard lot or a higher lot, but just use the recommended account. So for one standard lot, the minimum you can trade with one standard lot is $10,000. For 0.1 lot, the minimum is $1,000. For 0.01, the minimum is $200. So I think that explains that to Nino. Let me see if I have I think I've attended to most of the question. What is the cost for the physical training, and does it happen on weekends in Lagos? Now, we don't have weekend training sessions for now, though we had something like that sometime last year, but then it was just for a period. We're having a boot camp. It was a special session. If we have it this year, we will let you know when the time is right. But for now, we are not having a physical training on weekends. We're not having it on weekends for now. So what is the physical cost for physical training? Now, physical training at PU Prime, we are not really charging you. That's the truth. Even though the value of what you will get at our academy is worth close to $700, we're talking about global standard training in a forex market, not just even forex alone. Now we're talking about the global market, which includes the stock market, commodities, cryptocurrency, indices, and so on. The cost of the training, if you want to pay, to be honest, will be valued at close to $700. But then PU Prime is not charging you for the training. But we do encourage that you have a verified account with us that is funded. Now, funded with your own money to make money. The money there, you are not giving it to us. You are funding. Okay, now this is part of what we encourage too. While you are undergoing training, physical training, we encourage that your money can start working for you, and you can get connected to what we call copy trading. Copy trading means that you connect your account to the account of a professional. Now, you are very new in this business, so some things may actually be new to you, and it's quite understandable. So while you are trying to get your feet in the business, you can also start earning money immediately, because the professional you get connected to, there are those who have been in the business for long, who have a working strategy, and many of them, that's even what they do full time. So while you are learning, your money is making you are turning your money around. Your money is making something, on top for you, pending the time you become proficient in the business. So I emphasize again, we are not charging you for training, but you're encouraged to have a funded account, while you undergo training with us. So I believe that answered that question. How do you determine stop loss for your account? That will be dependent on your trading strategy. But for now that you are new, if you are following our analysis, we'll do all that for you. But by the time you want to trade by yourself, if you undergo our training, you will know how to set your stop loss and take profit. But for now, just follow our lead as we guide you. Okay, I think I've attended to all the questions here. Don't forget, this Friday we're having a very special training session on how to trade the stock market, the stock and the commodities market. The link will be shared in your WhatsApp group. Make sure you click and join. See, the biggest thing you can do in this business is to keep learning. If you want to be in this business for long, never shy away from learning. The more you know, the more money you make. That's the way it works. That's why they say that knowledge is power. So join us on Friday as we have this online training session on how to trade stocks and commodities. Okay, Tunde is asking, no online training. I'm not getting your question, no, Mr. Tunde. I'm not getting what we are doing now is online training. So this is an online training. Physical training holds, and physical training holds tomorrow, both in Lagos, Abuja. If you want to join, you're free to. I've dropped the address. Jibrin Mohammed, what strategies is the best to adopt in trading? Now that's a tight question. I can't say one strategy is the best. I would say the strategy that works for you best. The one that works best for you is the best. And that's why I encourage you to just follow us. Either you're doing this online or you come for a physical training, you will learn the strategies that we use and they work. They work very, very well. So I can't tell you which one. I know the one I use that works for me. Another person uses another one that works for him. So me, I'll tell you what works for me. The other person will tell you what works for them. So there's no overall best. Is what works for individuals that matters. Okay, I mean the physical training session has the online, but no, we don't stream our physical sessions. We don't stream it online. Physical is purely physical. So we don't do online streaming for physical session. All right, I think we need to come to an end. And if you want to start copy trading immediately and start making money from tonight, I'm telling you, when I mean from tonight, yes, trading is always going on. You can get across to me. I can recommend someone you can copy that is very, very safe, profitable, and can give you a good returns at the end of the month, at least in the range of 10 to 20% of your capital. It's been verified on the platform. All right. Well, and so you can reach out to me. You can reach out to me through the WhatsApp number in your WhatsApp group. Okay, so we've come to the end of this training tonight. I will drop the link to this video. The video will be uploaded and the link will be dropped in your WhatsApp group for you to watch again and again. Sorry, I can't disclose the name to you here. Just get across to me, Chidera. If you want to be connected, you can get across to me. I will sort that out. All right, so that'll be all tonight. Take care and have a wonderful night rest. Bye bye.
Bye. Good
Bye
night.
bye.
Thank you.
You're welcome.
Good night, sir.
Good night.